Neil Atkinson, the former head of oil markets division at the IEA. Neil, it feels like this oil market does want to break higher. It's sort of pushing through the upper end of the range it's been stuck in for some time, 84 average in the first half of the year. Are we now on a breakout? Is this the start of a breakout?
I don't think you can say that with a great deal of confidence, frankly. I mean, personally, from harking back to my days when I worked for Petroles de Venezuela, this kind of price range that we've seen from just below 80 for Brent and mid 80s, roughly where we are now, roughly stable. Thank you very much. That's very nice. I mean, I never get excited by potential breakouts upwards or breakouts downwards. We are where we are. And the issue is that we've got a great deal of clarity on where oil supply is going, partly thanks to our OPEC Plus friends, but also pretty clear where supply is coming from in other parts of the world. The focus really is on demand and how strong is China, or is China weaker than we first thought, and how strong is demand elsewhere. While we're trying to sort that out and trying to understand how that is, the market remains reasonably balanced. And personally, I think it's okay. The price is okay for producers. Obviously, many of them we know would like a higher price, particularly Saudi Arabia. But on the other hand, it's okay. Meanwhile, for consumers, the price is, again, as you might expect, higher than they might like, but it is not so high that it's having a seriously negative impact on demand. So I think we're in pretty well a sweet spot right now.
Well, Neil, on that point, I mean, we did see the OPEC report, statistical report out earlier this week. They're what they call their annual statistical bulletin. And in it, I mean, there's lots of stuff in it to pick up. But one thing that I took note of was that Iran's exports are at a 5-year high at 1.7 million barrels a day. There's really no teeth in these sanctions. We see Nigeria also increasing its supply. There's no shortage of supply. So let me take the opposite point. Why is this price up at this level when there's just this massive amount of supply available? Obviously, what OPEC is keeping off the market, but also what these other producers who aren't bound by this OPEC agreement are bringing onto the market. Prices are still quite elevated given the availability of supply.
Well, let's just go back to the first point you made about sanctions. I mean, sanctions are useless. They essentially do not work. And in fact, in some respects, they're self-defeating. In the case of Iran, we've had sanctions against Iran now since, I think, 2018 when Trump, or early 2019 when Trump pulled out of the JCPOA. And, it has been politically inconvenient for US administrations to see sanctions against Iran rigidly enforced. Why? Because a significant reduction in supply threatens higher prices, which in the United States means higher prices at the pump. And that matters far more than rigidly enforcing sanctions against Iran. And the same argument applies to some extent, although it's less important in the case of Venezuela, where, the US has been attempting a dialogue with the Maduro regime to see if there's some way in which democracy can be improved in Venezuela. And that has given the US the opportunity to relax sanctions to some extent. The sanctions against Russia following the invasion of Ukraine, where the G7 countries and everybody else that joined in sanctions against Russia, we essentially wanted to have our cake and eat it. We wanted them to be able to continue to export because we need the resources, but we didn't want the price to be so high that it would help support the Russian economy. And in the end, that's failed as well, because Russia continues to export massive amounts of particularly oil to China and
Neil,
India.
let me just interject there, because one of the things I've been to do to get my head around is absolutely, I concur 100% what you're saying. Sanctions have failed, but my question is, why are they failing? Are we driving ships that don't have insurance? Have we ports accepting tankers that don't have coverage? Are they illegal? Where is this breaking down. Obviously, the US or the others are not policing it, but there's a whole system of actors here, dark fleet, insurance companies, tanker companies. Where is this not working?
Yeah, sure. Yes, obviously, point one, yes, they're not being enforced as rigidly as they could be by the US and its allies. Point two, of course, there are always people, very sophisticated people, very well-resourced people that will do everything they can to find loopholes and find ways around around the sanctions because it is in their commercial interest to do so, which is why we've got the dark fleet, which is why we've got the growth of alternative insurance markets. It's human nature, whether we like it or not. People will always find ways around it, and therefore the supply will be higher than the people who impose the sanctions would like to see. And it's contributing to getting back to your later point. It's contributing to the fact that there is plenty of supply because, of course, the increase in exports from Iran in 2023 was second only to the increase in production from the United States, I think, in the overall supply league table for 2023. So yes, it's part of the fact that there is plenty of supply out there. But coming back to our earlier point, which I made before, and Paul and Vibhuti have reinforced, is that the picture on demand is not wholly clear. And if for the sake of argument, we were to see really great numbers on the demand side, then that might change the perception on the assumption that the OPEC plus countries maybe don't bring back as much oil later in the year as they're suggesting they might, because that's another factor that's sort of lurking further down the road, keeping this balance in the market to make sure it doesn't go too hot or for the interest of the producers too cold.
US correspondent Neil Atkinson has just returned from the bowels of Washington, D.C., and we wanted to get your insights, Neil. We're all living a little bit far away from the inside of US and, of course, are all affected by its minutiae. What was your takeaway from your recent trip?
Well, I went to Washington to speak at a conference, which was essentially a global energy outlook event, took place over one day, and looked at pretty well every aspect of the energy system. It wasn't just obsessed with oil. And what I came away with was the clear impression from the participants, most of whom were connected with the energy industries in some way, many of whom were actually investors, not just people that sit around talking, but a lot of people who put their money where their mouth is. And their view was that because of America's almost unmatched natural resources of energy, whether it be oil and gas, and to some extent even coal, and the United States lead in technology in many aspects of commercial life, the US was very well placed to continue to invest and continue to grow energy, including oil and gas, because they take the view, which I subscribe to, that the long-term demand for oil and gas will continue to be on an upwards trajectory, higher for longer, whether you like it or not. And the consensus amongst a lot of these people is that a Trump administration, a new Trump administration, would be better for American business than a re-elected Biden administration. And it's got nothing to do with Trump's personality or other issues. It's about what is good for business. And as far as those people are concerned, they are looking towards a second Trump presidency. Now, you can make of that what you wish. Another factor that lay behind it was not necessarily enthusiasm for Trump personally. It's enthusiasm for what they think will be better pro-business policies. At the same time,
sorry to interject. I just wanted to sort of challenge a point there and see what if you have any comeback from your insights in Washington. Is that I'm increasingly getting the impression that with the majors taking over the shale patch and the acquisitions of the big independent producers there last year, that the majors don't want to did put a lot of money in the ground in elevating the shale production because, of course, they're very cognizant of the impact it would have on oil prices. And so, from the commercial interest, yes, I'd like to book the reserves in my balance sheet, but I don't want to book production because I know it will have a downward impact on oil prices. And indeed, this takeover will be a flattening out of US production. Your thoughts on that?
No, you're right that the majors are taking a bigger role, of course, and that, to me, underpins the long-term future for shale as well as other energy assets in the United States. There is not going to be a drill, baby, drill mentality, even if there is a second Trump administration, because of the more cautious approach taken by the majors. But the point is that there are other measures which Biden took, such as the XL pipeline, I think was nixed on his first day in office. We've got this situation with the new export permits for LNG, which has been put off for what people regard as blatantly political reasons this year. Things like that. It's not just a question of drill, baby, drill. It's the fact that it's a huge industry in the US. It's a major contributor to stability in global markets for oil and gas because of its massive and likely growing export capability. And there are some of the people, or a lot of the people that I was moving amongst last week, want to see an administration which lets the US increase its energy potential. Yes, it's business, it makes money for them, of course, but it's important for the stability of global markets. And, I wasn't just in DC. I moved on to New York, and some of the best conversations, as you'll probably agree with, Sean, take place at a bar, and sitting up at the bar. And there are people, again, these aren't hicks from the sticks wearing MAGA hats. They're people who are active in business, quite senior professional people that take the same view that Trump will be better for the US economy than a Biden administration. Whether you agree with that or not.